Hello everyone, I'm Shenyuan Hu. I'm the founder of Joint Commonwealth Fund or JCF. So JCF is a crypto index fund that aims to make basic income truly universal. Now in this episode of JCF Weekly, we like to talk about a topic of how do you choose a good fund to invest. Okay, so this is an relevant question for those of us who might want to accumulate our wealth or our assets through fund investments. Now, the reason why we want to share this topic is because recently we will be getting a new partner into JCF, and he was planning to start up his own private investment fund, a private fund on his own. And because he has been doing some studying, research, and also some options trading himself, and have access to some investment vehicles. So friends around him are already willing to just give him money for him to invest. So he sensed that there could be a potential opportunity here, so he wanted to start off a private investment fund. And because after some exchange, we felt that our values and missions are very much aligned. So we're in the process of inviting him to join us and maybe start the private investment fund within the structure of JCF, okay, as offering a separate fund, a different fund. And because of this, we are going to ask. We went yesterday to ask, and someone who's very experienced in the private investment space. Who has done well in Hong Kong and is still doing some, on behalf of his clients. So we asked him about, how does a good private investment fund work? How is it structured? What's the most important thing to look after, etc. And this is why he told us. Basically, risk management is the most important aspect of the fund's design. Okay, now the reason why he said that is because for these private investment funds, usually the clients are some wealthy individuals or families. So they have specific criteria and ideas about where to put their money to. Now, you have to realize these are very wealthy people. They have a lot of assets and some even multi-generational. So it's been passed down from previous generations. So the most important criteria for them is to preserve the wealth and to grow a little bit. Okay, now we all know that if you put your money in banks just earning interest, that's like really low. So in order to put money to good use, you probably have to use it in some investment vehicle, right? But for these people, the first criteria is actually preserving the wealth. In other words, don't take any risk that might endanger the main body of our assets or our wealth, right? Because these are hard earned. And the reason why they become wealthy and rich probably is because they have this tendency and philosophy of preserving the wealth first and then earning interest or income or return on investment later, or as a second priority. So essentially, they will judge a fund with certain criteria. For example, if you tell them your fund has been growing 50% last year over previous year, maybe just 10% growth, then they will actually be skeptical. Like for many of the retail investors, individual investors, if they see, wow, a fund is growing at 50%, that's just jump in, and maybe get on the ride. But for these wealthy, rich people, no, that's actually a red flag, a warning sign that your fund might be taking too much risk, because if it's 50 up, like 40% more off the previous year, it could be, the other way around as well. So they are very conservative. And so this reflects back to the fund's design. So for example, like the new private investment fund my friend is thinking of creating and designing now has an angel investment component. Okay, so that is investments into potentially unlisted companies in the US that might participate in some big tech trends. For example, like Elon Musk, he's aiming to shoot people to the moon, to build up a moon space. And certainly he will need some suppliers to supply with him the materials, the equipments. So if you are part of those companies, you can probably expect your revenue, your growth will be some, tremendous figures. And if you can invest in those companies, likely it's going to be big return. Okay. However, our friend, at our council, this more experienced private investment, private fund manager, he told us that he would put like no more than 10% of the fund into this kind of investment because it's too risky. In other words, if it's going to have like a tremendous return, like angel investment, likely it means that it's also very risky. Like a lot of these startups or new companies, actually most of them fail. Okay, the high return behind the high return could be a lot of failure rate. So he would put no more than 10% of his position into that part. Now, so that is how he would have designed the fund, okay, or put the allocation. Now, so what does this imply for us? So this is another, thing we took away, was that we really should, look for the safety aspect of the fund's design. Now, let me share a little bit about how JCF is being designed and why it's been designed with safety in mind. And in fact, I consider it to be a quite safe vehicle in investing in the crypto trend. There are two parts to that. One is, of course, we're an index fund. Now, for those of you who know a little bit about index funds for the stock market, they are, because it's investing in a number of companies like S&P 500, for example, it's a lot safer than investing in individual companies, because individual companies, they might have ups and downs. It could change management, external environment, competition environment could change, laws could change, and that would badly reflect on the company's performance. However, if you're investing in an index, that means you're basically investing on the trend, the growth trend of the economics or the stock market. So as long as the big trend is moving upwards, you will definitely, earn on your investments. Same is true. So even Warren Buffett historically, index fund outperforms 90% of the actively managed fund. And Warren Buffett himself, the famous investor, he said in multiple occasions that index fund is the vehicle of choice, investment vehicle of choice for most investors, regardless if you're individuals or institutions. So that's in fact what we're also seeing in the past few years. A lot of money have flooded into index funds in face of uncertainty. Now, the second aspect of why JCF has a safety design is that we actually put all the profits of our fund into a dividend pool. Okay, so this actually is a safety measure for two reasons. One is that we all know that the crypto market is pretty volatile. It goes up and down in large percentage. So you could gain a lot of a lot of return in 1 month. However, if you don't do anything about it, if you don't cash out or sell it off, then it could lost in the next month, right? But usually human beings, most of us, are not that disciplined enough to execute on a disciplined strategy. However, with JCF's design, all the profits of the fund on a month-to-month basis goes to the dividend pool. Okay, so we automatically do that for you. But of course, then you will get monthly dividend payments of the profits that were previously earned collectively. Now, if there's a bad month, let's say the fund is at loss, well, no worries, because the dividend pool would still pay and in some ways compensating for the previous losses. Okay, so this is one form of protection. The other form of protection is that, as mentioned, a lot of investors, if left on your own, if you're earning money, you might just misspend it, elsewhere. You could cash it out and buy things, spend it, or you might want to become bolder and invest in other areas that actually lose money. Okay, so this is why most retail investors don't make any money in the stock or in investments long term, because they buy and sell at the wrong time, and they don't have the discipline to execute some sound strategy, logical strategy, in terms of accumulating wealth of a trend or of a market. Now, we do all that for you. So essentially, because all the profits are now in the dividend pool, so there's no way as an investor you can touch it. Okay, the only way you can touch it is through your passive monthly dividend payments. And that's something you can, again, utilize or let it stay there to reinvest, to continue to grow. So we consider our fund's design pretty unique and also pretty safe. Okay, so if you like to learn more, please go to our official website, jcf.world, to learn more. And we'd like to invite your participation and support to this effort, because our goal and mission is not to, just simply make the rich get richer, or, make some crypto millionaires who's already in the know or who's rich, but help more people, normal people like us, like you, to get involved in the crypto blockchain trend safely, and while letting everyone be able to earn some kind of passive income, even to the degree of basic income. So society as a whole can be uplifted due to this trend, instead of, the wealth gap disparity gets larger, wider, and more serious. Okay, so that's it for this week. And if you like our content, please do share with your friends and relatives, people who you care about. And you can like us on Facebook or subscribe to our YouTube channel. See you next week. Thanks.